Ladies and gentlemen, now we have a fireside chat titled VC Late Stage Funding, Bull versus Bear. Our speakers are Luca Barbi, General Partner and Chief Operating Officer, STV, and Philip Bahhoshy, Founder and Chief Executive Officer, Magnet. Please welcome them on stage.
Good afternoon. Thank you. Absolute pleasure being here today. I have the pleasure of hosting Luca Barbi, who's the CEO and General Partner for STV. By way of introduction, my name is Philip Bahhoshy. I'm the founder and CEO of a platform called Magnet that captures all venture capital data across emerging markets, but specifically here in the MENA region. The subject is bull, bear, mind the gap, missing funding at late stage. And we have about 20 minutes to kind of deep dive into the state of the market. Before doing that, I thought I'd just give a little bit of data and context, some of which was mentioned earlier. At the moment, you are seeing a slowdown in venture capital globally. You're seeing some of that percolate here to the MENA region. In fact, it's the first year, and we'll be publishing our end-of-year report at the end of December, the beginning of January, where we've seen a drop in venture capital investment since 2016. We're currently at about 40% lower than last year's figures, both in terms of capital and transactions. But I guess the silver lining is that this is a trend that you're also seeing globally, if not in all emerging markets. One interesting thing specifically to note when we talk about late-stage funding is that Q2 and Q3 were the first time in the MENA region that there were no mega deal investments in MENA. That's a deal that is $100 million of value plus dollars. But what we have seen is a strong, let's call it rebound in Q4, not quite recovery, including some big investments that have been taking place, like Tabby's investment here in the region. And as was mentioned earlier today, indeed, Saudi Arabia now ranks first in terms of capital deployment in the MENA region and is likely to be the only geography in the region to see an increase in capital deployment year on year. But to the question of the current landscape, Luca, number one, any reflections on the numbers that I've just shared? And knowing what you know about the global market, are you surprised about the current slowdown in investment activity globally and regionally?
Yeah, thank you for your question, Philip, and good afternoon, everybody. So just a couple of words regarding STV. I am general partner at STV. We are Saudi-based venture capital firm. We have $800 million AUM, and we focus on growth stage. So technology company that operate in the region and are raising a Series A, B, or C. To answer your question, we see the global trend, especially in US developed market, with a big crunch happened in 2023, 2022, 2023. And then we see a kind of the GCC MENA region tending to align to this decline or slowdown, let's say. But what we see on the ground in terms of growth stage opportunity, it's actually we see an increase of those opportunity. So on one side, we see an increase of companies that are growing healthily and they're approaching, late stage and exit. But on the other side, we see the capital available, it's not enough, or it could be more. So we are not surprised by what's happening because we understand that investors have the tendency to align to the global cycle. But we are concerned and sorry that there is not enough capital in the ecosystem, in the local ecosystem, to support emerging winners.
So we say that about the MENA region at large, but I mean, if we're saying that the Saudi ecosystem is going to surpass $1 billion of investment, historically, late-stage funding has been driven by yourselves and international investors. But we're now seeing international investors slow down, and there's only so many funds in the region that actually have the capital to be able to deploy at late stage. And how should we categorize late stage? Series B plus, i.e. a $40 million investment round. So do you think that there are even enough players locally to fill that gap?
Let me give you a long answer, if you allow me.
Sure.
And let me step back. So the venture capital ecosystem in Saudi and the rest of GCC is very new, right? In 2018, the capital deployed in technology company in Saudi was 50 millions, negligible, 5 years ago. Now, in 2022 was $1 billion. Is this large or it is small? It's still very small. It's 0.07% of the GDP. So it's 10% compared to the GDP of what we see in South Korea, in India. And if you go in more developed market, we arrive to 1%. So it's still very small. Now, second data point, right? When you start a technology ecosystem, most of the company are early stage. Early stage means you need $500,000. The average ticket for pre-Series A is $3 million. When you go through growth stage, it's $50 million, right? Now, as we move from zero and we grow, the number of growth stage companies are growing. So the number of capital that we need to deploy is not increasing linearly, but exponentially, because we move from company raising 3 to company raising 30. So this is like, we need to be aware of the exponential trajectory. Now, in this dynamic, what happened? That in 2021, there were few growth stage rounds, very important, and those rounds were supported by global VC. We see SoftBank, we see at the time it was Sequoia, we see Tiger, right? Coming in regional players, including several companies in our portfolio, leading or co-investing. Those have been vanished after 2022. We still some exception, but the exceptions are limited. So here we have this dynamic where the fundamental of our ecosystem are growing exponentially. Globally, we have a decline, and global investors, because of their problem in their own countries, they are less present. So let's say, if you look at the fundamentals, we need more capital for reasons that are more, let's say, linked to the global cycle. We don't have enough. So I think we need to, to remain more decoupled by the global cycle, we need to develop our own muscles in terms of investment capabilities and capacity. We need more STV that operate in this market, that have 100% focus on the region, 100% focus on the understanding the market, and enough capital to invest in growth stage.
And so how do you catalyze that? What needs to happen to see more STVs in the market? Is it a government initiative? Is it a private initiative? Is it a corporate? We're beginning to see some corporate players begin to play, but many of them are taking the simpler, not easier route of accelerator programs or early stage investment. How do you see bigger ticket investors become interested in this space?
So I give you another long answer because I'm weak in synthesizing. So again, let's look at the context, right? The region still needs to prove itself. We had a few success cases that are important, but still very little. We had Karim, we had Talabat was acquired by Deliveroo, Souk.com by Amazon, we had some IPO like Jais, very promising. But still, if you, as a regional fund, you go to the private investors to raise money and say, I will deploy in this region, private investors, they still associate a regional risk because the ecosystem is not proven enough. And also the regional players are not proven enough because they just, STV, for example, was one of the first VC to have been launched in the region, but was 2018, so we are still in our divestment cycle. So, and this is like a critical moment, right? We have the opportunity, but not enough track record. There is potentially appetite from private investors, but it's not coming. So this is where we need probably, more regional kind of sovereign pocket helping the ecosystem, like what we see also in other markets. There are sovereign wealth funds, but there are also pension fund, there are endowment fund. Those are the typical allocator, capital allocator, that like VC as a long-term asset class, they can support the regional players more, and they can also attract the global to localize in the region.
But just to be clear, you're also assuming that there are enough, and I'm not judging, but quality startups that can raise late stage funding. I mean, the assumption is there is the deal flow for that capital to be allocated?
Again, here it's about the mechanic of the ecosystem. So from 2018 until today, in the MENA market, were founded 2,000 startups were founded, 2,000, right? In total, in these 5 years, we deploy $9 billion, right? Of these 2,000, 220 are now post-Series A. Of these 220, and actually I'm referring to Magnet data, these 220, all of them, they are looking for a Series B at least, right? And a portion of them, we should assume that are healthy. Now, in our portfolio alone, we have 6 companies that are in the growth stage. Each of them is doing more than $100 million in revenue. 2 of them are breaking even. One of them raised $200 million recently. This is Tabby, with a round driven by a global VC. I think the opportunity is tangible, is concrete, right? And then I think the size of the opportunity also depends by the availability of capital. Because this company, can fail, and then retrospectively we can say they were not good enough, but actually they could fail because they do not have enough capital. Right? And not only the winners need to receive capital, also a few companies that potentially will fail need to receive capital, because this is the game of venture capital, right? You have typically, even in a growth stage portfolio, you have 20% of the company returning the fund, 50% doing so-so, and the other 30% failing. So we need also to factor some level of failure to push the innovation forward.
So you're saying there are, even if it's 220 and a small proportion of that, of companies that are investable. But let's put things in context. We've seen a liquidity boom in the last 2 years that we haven't seen in the history of venture capital. Obviously, liquidity boom means valuation rise. We brought out a report last week. Series A investment has dropped off 35%. Seed investments staying relatively strong because early stage risk is in a kind of stronger situation. Series B plus, even harder, specifically for companies, growth at all costs, hyper-growth of the last 2-3 years. Do we need to wait before those companies become investable from a valuation perspective, with founders needing to realize that the market is no longer what it was in 2021 for that capital to start coming in? Or do you think that that realization that the valuation bubble has potentially popped, and actually these companies are good fundamental companies and need cash to go to their next level?
So what we see is a mixed picture. Some of the inflated valuation also, they're sometimes driven by investors that are not specialized in VC. And this is a phenomenon that we see a lot in GCC. We have other type of investors that come into the venture capital class, and we welcome them because it's an important source of capabilities and money, but sometimes we see valuation that are not, that could be more conservative. So this is one factor. The other factor is that we see the growth stage company having recorded a very important growth in their economics, in their performance. So the evaluation remains high at a lower multiple. So what does it mean? The multiple is lower because the market pricing is lower, but is more than compensated by the growth of the revenues and the margin of the company, right? So here we have companies that still can do 2-3x year on year, even though they are relatively large. So it's a mixed picture. We need to bring discipline when it comes to valuation, but also we need to see case by case. And some companies deserve a larger valuation because they, because of the performance increase.
We did a webinar, and I'm going to ask one or two questions that we discussed there because I think they were interesting. So question number one that we discussed, when you talk about scale at all costs, many people have been talking about the importance of having to scale beyond a specific country. But you kind of had a different view of that, specifically in Saudi Arabia. Is there a requirement to scale beyond borders into other MENA markets, if not Southeast Asia or other geographies? Or do you believe that the ability of just being a Saudi-only country is justifiable for a Series B investment?
So the way I see what's happening on the ground in terms of technology innovation, maybe I could frame it in three phases, right? I think there is a phase one where we have the, let's call it a replica of business model that have been successful elsewhere. Let's take Karim once for all, right? You have Uber elsewhere, you have Karim, you just replicate, you adapt the model and you make it work regionally, right? So this is, let's call it phase one. Now, the phase two is once this company have conquered the region, they can go beyond the region. Eventually another emerging market where the type of service is not available. And then there is the third phase that is a pure innovation, what we are discussing in this conference, right? Gen AI, how to come up with deep technology that from the region can go global by definition because it's something that nobody will have. So I think in the phase one, there are still opportunities that are sizable enough for regional champions to reach a successful exit and a successful case, right? Especially in sectors like PropTech, like logistic, like fintech, and like e-commerce. These four sectors, because also of the demographic of our population that is very favorable, company can find enough market to be successful locally. And then now I think we will start seeing in the next vintage a company that from local go global. So for example, we have Uniphonic expanded to Turkey. We have Tracker also expanded to Turkey and the east of Europe. We have Noon Academy that went to India. So you see some of this model branching out. But it's very complex, moving outside of your own region. It's different customer behavior, different competition, different regulation. So we appreciate that upside, but we value, players that first and foremost exploit the regional opportunity.
We predicted at the beginning of the year this would be a record year of exits across the whole of the region. That hasn't necessarily transpired. It's an emotive exercise going through an exit. Listings are happening. It was great to see the number of listings that have happened for technology companies earlier today here in Saudi Arabia, and I know that's high on the agenda. What do you anticipate, and we go back to the need for returns, whether that's for investors to be incentivized to bring in more capital, government to be incentivized to double down on a particular sector. What do you see as the exit opportunities, M&A opportunities and listing, so those two different avenues, going into 2024?
I think they are both very valuable. Listing, when we start our journey in 2018, was really an exceptional situation we consider. And now we consider listing more and more as a channel for exit. We see a company with a strong regional brand that are sizable, that can keep growing, and we see the market on the other side. The investors in the stock exchange, they have appetite for tech companies. On the other side, we see corporates of the region that are becoming more, they're paying more attention to innovation. And they are learning that doing innovation in-house is very challenging because you have a DNA as a, let's say, traditional business that is very different from what it takes to develop something new. And now we see them more and more interested in considering M&A as a way to grow their capabilities and grow their business. So I think they are both viable, and we expect kind of a 50-50 split.
1 minute left, and I always like to leave it with something tangible. Do you have any 3 recommendations, suggestions that we could see in the ecosystem to really catalyze the gap at late stage funding over other stages?
Say again, sorry, Philip.
Do you have any 3 recommendations, whether it's for government, whether it's for VC or entities, that can help catalyze the gap that we see at late stage funding going into 2024?
So I think we are in a region that is an exceptional situation in the history of Saudi Arabia and the rest of GCC. We have been educated by the leadership of this country to think big. We are not here to predict the future. I think we are here to make the future that we want to have. So we need to keep infusing the energy that I see from the government, from the entrepreneurs, from the corporates, and from the capital allocator. The title of this panel is kind of mind the gap. So now I think the priority should be for the capital allocator, private or public, how to make the VC sector sizable enough to capture the opportunity that we have in front of our eyes.
Great, and that's 0 minutes.
Thank you.
Perfect. Thank you very much.